Hey, everybody. Welcome back to the Real Deal Pod with Allister and Geoff. It is a absolutely chilly Wednesday afternoon. Welcome to Winnipeg weather, my fellow British Columbians, where it's bright and sunny outside. It is chilly as heck, and the snow feels like concrete. But, my boy, our boy, Geoff came to the rescue. We are all on location, cuddled around Geoff's fireplace together. We've got a special guest with us that Geoff's going to introduce. And we've got our hot chocolates, and we're ready to bring you an amazingly hot podcast again. Geoff, thanks for having us. How's it going, buddy?
Well, I'm doing well. Like you said, it's one of those deceiving days where it looks super nice outside, which it is, but you are super cold when you go out there. You know
Winnipeg.
It's cold, like
Welcome
if you're
to
out there,
Winnipeg,
you have a
Manitoba.
runny nose and your nose sticks together.
Welcome to Winnipeg, Manitoba. That's what I'm saying. Where the snow feels like concrete.
Well, yeah. So, Joe, have you ever been to Manitoba? Where?
Well, I've driven past it when I was a kid, but really, I don't know it. All I know about Winnipeg, Manitoba, is mosquitoes and Filipinos.
Oh, and it's the best. And that is absolutely true. I have
You're
so many
Filipino,
amazing
Joe, aren't you?
Hey,
I have.
Phil or Joe, are you not Filipino?
I am Filipino. Yeah.
Okay.
Yeah, there's a massive Filipino community. God bless them. Many of them, I have many friends within that community. Back home, that is where I'm from, Winnipeg, Manitoba, and they might have told you as well. It's the best city in all of Canada. You probably missed that as you were driving through and swatting away the mosquitoes at the same time. That's
I didn't realize Manitoba had a huge Filipino
massive
population.
Massive.
I would
actually, it's one of the biggest in Canada. It's actually one of the biggest in Canada.
How can Filipinos immigrate to Manitoba from a tropical kind of country to Manitoba?
Geoff, my dad's from Tobago. My dad's from the Caribbean.
Like so many different populations, like Jamaican populations, for example, coming into Toronto, right? Like, holy smokes, they're coming in literally at like December where there's like 2 feet of snow. I'm like, why? Why? Like I actually was born in Toronto a little bit here.
Okay, so you know the snow.
I'm sorry?
So you know the snow then?
So I know. So I was born in Toronto, so it's definitely not my fault. But we traveled from there to Vancouver driving, and then my dad said, "You know what? It's no snow here. It's a lot better. That's a little wet, but I ain't going back." So we're Canuckers all the way through.
There you go.
Not a lot of due diligence in early immigration.
Right.
Well, that's awesome. Hold on, Geoff.
Oh.
I got a quick thing because I know we got to get into Joe because Joe's got some amazing stuff that we want to chat about. But I actually got a did you know for everybody before we kick this off. And it's a did you know about our weather. So I just want to let everybody, did you know that January was so dry in BC that our snowpack, and what the snowpack is just what I said. How the snow is made concrete. So it's the snow that builds and builds and gets icier and icier, right? The snowpack is now only 70%, 72% of normal, pardon me. So that's kind of like ordering a large cup of coffee and getting a medium instead. So really what that means, guys, is that I want everybody to sort of be safe in the summertime, because that means we're going to have less, it's going to be drier when the snow melts. So when we're enjoying the sun, because when this warmth comes back, I'm getting the heck outside and going crazy. So when the sun comes, be safe. That was the did you know, where we're actually less snowpack than normal. I thought that was pretty cool.
So what does it mean when you have a less snowpack when you transition into hot weather?
Well, that's all the snow that's been packed down, right? So the higher the snow level, the more snowpack you have, the more compact it begins. So when it melts out, you have a larger coverage.
Right.
Because it's so low, we're going to have less coverage. So it's going to mean it's going to be a lot drier out there once
Oh.
the sun hits, and that's going to of course cause for potential fires out there and stuff like that. So be
Gotcha.
safe when we're enjoying the heat.
It's crazy though, because prior to this season, it was supposed to have a huge snowfall. Like people were saying that this was to be the season to get your season's passes on the ski mountain, because it apparently was supposed to be phenomenal. But I don't think that really transitioned to what it was supposed to be. So
I thought about you, Jeff, actually, when I heard that too, because you're such an avid skier. I thought, okay, that must impact skiing a bit, the snowpack levels. Yeah.
Right.
yeah, not a
'Cause
lot.
I'm in Tawasin and we don't have anything. And then go to
Yeah.
Langley and it's like so white.
Joe, you're where my wife keeps asking us to move. Stop it. I can't introduce you to her because he's just gonna be, well, see, Joe's out there. Well, why don't we just move on over out there? And I keep telling her not yet.
It's a good spot. It's a good spot.
It is. It's wonderful. It's a wonderful place. She grew up in Ladner.
I'm sorry?
She grew up in Ladner. So the
I did.
Ladner to Watson. Yeah, she did. She grew up in, so my wife grew up in Ladner. So it's a
okay, cool.
great area.
All right, well, let's jump into it. So Joe Tablan, how do you pronounce your last name?
Tablan is the correct phonetically speaking, if you want
Tablan. So Joe, tell me a little bit about you. Tell me a little bit about the company that you founded, and tell me a little bit about who you are, what you do, the company that you created, and what people need to know.
Mm-hmm. Well, first of all, thanks for having me on the podcast, guys. It's a really entertaining podcast to start off, which is great.
We try.
Yeah, but like I said, I was born in Toronto, raised in Vancouver, went to high school in Vancouver and all that stuff, and actually was in the hotel industry first 12 years. So I was an executive for some of the Five Diamond hotels here in Vancouver and some of the private clubs. And honestly, I got into the financial services industry just by accident, really. Someone was telling me a little bit about it, and people kept asking me some stuff about, oh, you have real estate, you have this, like, how are you doing this on, just doing what it is that you're doing? And so my old Starbucks manager actually told me a little bit about it because he got into the financial services industry. And from there, I started off with a company called Freedom 55 Financial. You've seen the commercials back in the 80s. And so
which one, sorry, Joe?
Freedom 55 Financial.
Okay, yeah.
Right? So, Freedom 55, that's better than 65, right?
Yeah.
And, after 4 years of people like, wasn't it Freedom 75 or 85 now? I said, you know what? Might as well start my own thing. So, I started Clearpoint Wealth Management in 2017 and basically incorporated it in 2018 and never looked back. So what I do now is really work in the corporate space. We work with high-level professionals and business owners to help them with basically planning inside a corporation to make their money a little bit more efficient and have the opportunities that they can use that money to leverage or do whatever they need to do with it using life insurance.
Yeah. That's an amazing story.
Yeah.
That's awesome.
Lots of very successful people have their roots in Starbucks.
Yeah.
Yeah. I think Starbucks is still one of those corporate companies that actually instill good customer service. It's kind of like the McDonald's, right?
That's what I was just going to say. They were the next generation McDonald's.
Mm-hmm.
They were the next generation McDonald's. Yeah.
So Joe, tell me a little bit about your ideal client, where you're licensed, like where people, where and how people can use you that are possibly out of province.
Right. So Clearpoint Wealth, I'm licensed in 3 provinces currently. So we're in British Columbia, Alberta, and Ontario. And so mostly everything is virtual. I mean, COVID was definitely a lot of horrible things happened in COVID, but the one thing is it got us into more technology-based stuff. And so we're able to have those virtual meetings. And so the ideal client that really we work with, their problems are really threefold. One, they pay too much in tax corporately or personally. The second is they want that money liquid, so that way they can actually access it to whatever they need to do. Because a lot of the time in Canada, we have to choose either, hey, we can do RSPs or we can do real estate or we can do crypto. We don't have the ability to do multiple things at the same time. So we want that money liquid, so that way if you have any emergencies or opportunities within your company, you can take advantage of that. And the third problem that they face is, how do I transition my business over to this or that or somebody? And how do I get the money out so I can live with it or pass it on to the next generation?
Yeah. I know that I've had many good discussions with Joe and about corporate whole life policies. And I know we're gonna kind of transition and go into a life insurance and the value of life insurance. But it's one of those things that I think people don't do corporately. You know, they don't think about what's going to happen when I wind up my company. What is that tax implication going to look like if all of a sudden I wind up or pass away suddenly? And I think a lot of this has to do with insurance. Like, insurance as a whole is one of those things that people, I find, never really they want to talk about it, but they never really want to do because there's a cost to it. And then something happens and then they're like, WTF, why didn't I have insurance? Right?
Exactly.
So,
one of the things that most people actually, a little tidbit for people, if you actually take a look, if you have a buy-sell agreement with a partner, take a look at your agreement. Most of the time, a lawyer will draft up that it has to be funded. And most of the time, the funding should be in a life insurance policy. And most people don't have that.
So let's just back this up a little. When you say agreement, what are we talking about, Joe?
So Jeff, if me and you are partners in a company, and for example, I pass away and I own 50% of the shares of the company, you, I assume, would not want to be partners with my two kids who are 16 and 13.
Right.
So usually what would happen is you'd have a buyout or a buy-sell agreement that we agreed to with a lawyer and drafted it up. And the agreement would say that if I were to pass away or you pass away, the living shareholder would buy out the next of kin.
Yeah.
And usually that would be either an asset or however you're going to fund it. But most of the time they'll say fund it with an insurance policy. And it could be a cheap term policy. It doesn't have to be a whole life or anything like that. It could be very inexpensive and affordable. Just get it funded.
Yeah, I think we're going to have you back. I think we're going to have you back, and we'll talk about whole life policies because as corporate business owners, I think whole life policies are a must do or a must have. And I think there's a lot of confusion about corporate life or whole life policies, but I think we're gonna bring you back to that, and we're gonna talk about that.
Yeah.
For sure.
Sorry, I just had it because Joe was touching on something in terms of the division of assets. Like, if Jeff not wanting to be a partner, with his 16 and 13-year-old children. So I was going to say, how does that then, with my clients dealing with real estate, how does that all tie in on the real estate side? Because that's a really interesting fact. We know, I deal with a lot of investors, right?
Mm-hmm.
And, yeah.
So in saying that, you definitely would like, if you have multiple partners in different investment, real estate holdings or what have you, a good thing to have is definitely just having that coverage. But how does life insurance tie into real estate is a really good question, is because most people think that life insurance also is for, I got to pass away for it to benefit.
Right.
But there are provisions in the Income Tax Act that actually help with life insurance, particularly whole life insurance policies and universal life policies, where it has a component that actually grows cash. So it's a really great place to safeguard your money. So I always tell people, if me and you, Allister, are partners in a real estate deal, right, I'm sure a portion of that deal will make sure that, hey, you know what, 5% will go to incidentals. 5% will go to CapEx in case we need a new roof or something like that, right?
Right.
So most of the time they're putting it into a savings account, which really is not making them a lot of money and is actually losing money due to inflation. So why not cover ourselves with insurance policies, but also be able to tap into that policy if we need to, kind of like a HELOC on a personal residence, where you can borrow against that policy. And then if we need it for, say, hey, you know what, one of our rentals moves out and we need 2 months of rental incidentals to cover ourselves, we can actually get it from our policies. And then if we refinance or whatever we need to do, pay it back whenever we want to. So we have those free money, liquid money that we can use for other opportunities, but also for emergencies as well.
That's actually super. That's super interesting, and I say that because I have a friend of mine. They had a property that they purchased in Kelowna, and they were purchasing as a long-term rental, and so the market there was quite active from a rental perspective because there were so few. But when the Airbnb Act came in, it brought all those Airbnbs into the rental market,
Right.
so it actually lessened their ability to their amount they could charge for rent. I beg your pardon. So that's actually one of the things he told me yesterday that he had done to cover the expense for a little bit.
Definitely.
So it's actually very interesting.
Yeah, whole life insurance has some really key benefits that many people aren't aware of. First, tax exempt growth that has obviously death benefits, but creates an immediate estate plan. The ability to leverage that money so that way it still grows inside that policy while you're using it somewhere else, as well as having more tax deductions inside a policy. By using it for leverage, you can actually access more tax deductions using leverage. So that interest is now tax deductible because you could borrow it somewhere else, put it somewhere else as an investment or business purpose. Right. So, awesome. So many key benefits, and it's guaranteed never to go down.
Right. Yeah. See, this is where I have to retract, because I was like, I thought we're talking about whole life policies, but no, maybe we're going to talk about whole life policies, but it's like, yeah, we're talking about whole life policies. So, I correct myself. Joe, tell me on how whole life policy strategies work for you personally, and a little bit more on how they work corporately. I know you kind of touched on that a little bit, but can you put that in a nutshell as like, I guess, again, who should get a whole life policy, and how does that work again for you personally and or corporately if you're to have one? And I know you touched a little bit on that, but I wanted to kind of ask that direct question.
For sure. I think for one, I'm going to start with the corporate first. People who have, who have a tax problem inside a corporation, they want to be able to have the ability to keep that thing leveraged or keep that thing liquid. That is a great place to put your money. So if you have retained earnings inside a corporation, it's a great place to put your money and park it when you need it for something else as well. It also creates a flow through inside the corporation. So that way, if you do pass away, you can get that money out tax free using something called a capital dividend account. The last thing about corporations is that you're using corporate money as opposed to personal money, which means that you don't have to take a salary or a dividend out to be able to pay for your life insurance policies. So those really are the three key factors, or there's definitely a lot more, but three key factors to getting a whole life policy inside a corporation is those three ones. If you're looking at it from a personal perspective, definitely having a need for life insurance is key. Because at the end of the day, we still have taxes and we still have, families to take care of if we're no longer here. The second one would be if you've exhausted a lot of the accounts that are available to us. So if you've done, I'm not going to say RSPs, so to speak, but let's say TFSAs or FHSAs, all of these things that you've maximized and you still have money that you need to sock away somewhere, where else can you put it? That's going to be liquid, because with RSPs, yes, you can do different things with it, but they're not as liquid as you think they are.
Right.
Right. So
who do you think needs a whole life policy, what is that ideal client or that client? What does that ideal person look like that needs that whole life policy? Because there's a lot of people that are out there that don't even understand the whole life policy, and they either don't understand or don't even know about it, and they could be perfect people that actually need it. So what type of person should be really looking at these whole life policies?
I think someone who has, like I said, exhausted a lot of the accounts that are available on a personal or corporate side. Someone who has a good chunk amount of wealth that they want to safe haven, as well as they want to be able to use.
Right.
So someone who has I look at it corporately. I think more people corporately should have whole life insurance as opposed to personally. Because personally, it really depends. Like if you're, making $75,000 to $80,000 and you haven't exhausted your TFSAs or any of those things, is it really a need? But more so, do you have something that you need to protect, right? When you pass away, if you're 45, 55, 85. But corporately, it's just a great place inside a corporation to be able to put money in because it's a lot cheaper to keep it inside the corporation, as well as you have the ability to use it while it's growing inside the corp. A lot of people talk about the advantages of whole life or universal life as an investment. I actually think it's just a great place that's better than a GIC or a savings account to make your money grow tax-free inside a corporation, but still have the ability to do what you do best. I mean, we're talking about real estate here, right? So if you're going to sell me that real estate is better than life insurance, you're right.
100%.
Like, whole life is just that added bonus or the complement to what you're supposed to do in the first place.
Yeah.
If you think that, life insurance is better than real estate, then I think you're in the wrong podcast.
Right. Yeah. No, it's exactly it.
Right.
I also like the idea of the whole life policies. I always call it like a forced savings plan, right?
Right.
Yeah.
And what I like about whole life policies is that it is a forced savings plan that's actually earning you a return on investment.
Mm-hmm.
And that if you ever never use it, you can actually draw it out and it comes back to you with that return on investment. And if you still leave it in your corporate policy, you can borrow against it. So you can leverage against it too, which is just fantastic.
Exactly. And I think that is the biggest hurdle most people get on, Jeff, is that the ability to, why would I borrow my own money is a big key question that I get all the time.
Right.
But if I say, well, you're paying for that house that you're living in, correct? And most people say, yeah, I'm paying for the house. I'm putting my money in my house. Well, if you had another investment property that you could take advantage of, what would you do?
Yeah.
Well, I borrow against my house and go, but you didn't take the money out of the house, right? No, I borrowed against it to go buy that other house.
Yeah. Yeah.
So your principal residence is really just your life insurance.
It's like having that equity and putting a HELOC on it, using that HELOC for reinvestment purposes.
Bingo. Except with a whole life insurance policy, you can borrow up to 90% as opposed to 60% right now in a HELOC.
Right. 65%.
65. Thank you. Thank you.
Tell me about because a lot of times people are also going to say, Joe, well, I got to pay interest on that money. So what is the answer when you hear, well, I got to pay interest on that money if I'm borrowing it?
Mm-hmm. And my answer is nothing comes for free. Just like you do with a HELOC, you still pay interest on that loan. The difference is that if you're going to use it for business or investment purposes, based on the Income Tax Act, that is actually a tax deduction on your corporate books or personal books.
Yeah.
Right. So if you're looking at it from a passive investment, I know the income tax, I have to actually take a look at the new corporate tax rates. They actually went up here in BC. It's 12% now from what I saw. But passive investment, let's say, is 50.67%.
Yeah. Yeah.
If we have a tax deduction of 6%, we're actually only paying less than 3
Yeah.
on that tax deduction. That's good money.
I'm a big fan of whole life policies. But tell me some of the cons. Like I know there's a lot
That's
of
what I was going to
about
ask
it.
you because we've talked so many good things. So there
Right.
has to be a negative.
But you got to be able to pay for it. I think
There it
that's the big
is.
thing.
There it
You must
is.
be able to fund it. If you're
Yeah.
if you're a corporation that's kind of new, I would say don't do that yet, but evolve. Make sure your advisor is evolving with you and not trying to sell you on something at the end result. Because you can have a term policy. We do this all the time. You can do term 10 policies to get the coverage going. And when you get more cash flow, you get more retained earnings inside a corporation, we can convert that without any medical underwriting within 5 to 7 years.
So Joe, tell us what you mean by term 10, because a lot of people are not going to understand that.
Good question. So there's 2 different types of policies. There's term and permanent. And within the permanent, there's 2 as well, which is whole life and universal life, which I'm not going to get into. But term is kind of like car insurance. You're renting that insurance for a set amount of time. Could be 10 years, 20 years, 100 years, whatever it is. It's not creating any cash value. It's not creating any gains or investment, if you want to call it, inside that policy. It's literally like car insurance. You don't die. You're just paying the premium.
Yeah.
Permanent is set for the rest of your life. So if I go back to term, after 10 years, your policies are going to go up because you're 10 years older.
Yeah.
So your premiums are going to get more expensive.
Yeah.
So term is really good for things that are very, that aren't permanent. Things like mortgages, right? Mortgages are going to have a 20, 30-year amortization. That's a great product to have just in case something happens.
Right. So why do people push term so much? That is like, I know that is one you hear out there, that people push term insurance quite a bit. I'm not a fan of it, but yeah. I have my reasons. You go ahead though.
Like I said, term does have its place. If it's something that you can't afford, but you need the coverage, it's very affordable. You can get a term policy for $1 million for like $50.
Right.
Very simple, right? It's something to just cover you for those things that you need, right? Yes, it doesn't have those sexy components of investment and whole life and all those things, but that can come later. You want to build up a bucket of wealth first, so that way we can protect it. If you don't have anything, what do you need it for? You might as well have something that's cheap and affordable first, and then grow there. So for example, we have a lot of clients that are startups. So we'll get them a term policy, maybe some critical illness insurance or whatever, which we won't get into. Get them a plan to start off. But once they're making money, so for example, as a realtor, you're probably going to be a sole prop, and then you're going to turn into a PREC or a PREC, have a holding company and all of these things, and money's going to flow, whatever. Those are good times to take a look at reviewing your insurance policy and then adding that component inside a holding company as that safe haven for what you're going to do, which is buy more real estate in the first place. Okay. So you're evolving that policy from here to here.
That's awesome. That's awesome.
So, but yes, so going back to it, definitely it's just a great place to put it. Because unfortunately we can't put RSPs, TFSAs and stuff inside corporations.
Right.
So really the only thing that we can do that doesn't have any tax on it is insurance.
Yeah. Well, why have people not heard of this before? Like what is your insight on that?
Well, for one, I think the big one is your corner store bank doesn't approve or doesn't know about it. They can't offer this stuff because if you're looking at, say, your RBC bank or sorry if I call it out, but like some of these big banks, they have different tiers. So for example, if you were to ask for life insurance at your CIBC across the street, they won't actually know how to do it. They actually have to send you somewhere to another branch where they don't know that person to get some insurance. So they don't know how these things work, even though life insurance, whole life insurance has actually been around since the 1870s.
Wow.
That's crazy.
So yes, so Canada Life has been giving out a dividend every single year to its policyholders since 1874.
Wow.
That's through world wars, depressions, market crashes, you name it. It's given out something to its policyholders every single year since that time.
And the name of the Winnipeg Jets Arena, the
Correct.
Canada Life Center.
Exactly, right? Which is who I used to work for. So they said they've been around forever. And there's there's a lot of people that will tell you about prominent people that have used their insurance policies for different things, like Walt Disney and Jimmy Pattison and all these other guys. And yes, it's again because of the fact that back in the day they actually didn't have term policies.
Right.
Oh.
You only had whole life. That's the only insurance that you had.
I didn't know that.
Yeah, there was no term until like I think it was like the 60s or 70s or something like that. And universal life policies came in the 80s.
Well, now speaking of that, and not to get too deep into another policy, but what is the difference between universal and whole life insurance?
Yeah. So the big one is whole life is not tailored to a market. So what universal life does, it literally separates two things: insurance and investment. So a part of your premiums are going to go to a portion of this and a portion of the investment. And this investment is going to be to a market. It could be the TSX, S&P, all of those things. The great thing about it is that there is flexibility into it, right? So you can not pay your premium for a year because you have cash value inside it, what have you, all of these things. There's so many things that you can do with it. I'm not going to get into it. But the thing is that there is more risk in a universal life policy than it is in a whole life policy. So therefore, that's why you see a lot of people don't actually do whole life or universal life policies because of the fact that, or it's done wrong, to be honest with you. Right. It's sold wrong because they're leaning more towards the investment. But if the investment goes down, the investments go down.
Right.
Remember, I told you with the whole life insurance policy, one of the great characteristics of it is that the fund that you've created inside a whole life policy is guaranteed never to go down.
Never to go down. Right.
Because it's not given as a gain, it's given as a dividend.
Yeah. Yeah.
So what the whole life insurance policy is doing is actually investing inside a fund that you owned. So think of you investing in Apple and they give you a quarterly dividend.
Yeah.
If they, shit the bed, sorry, pardon my French, but they, don't do well, they can't come back to you, Allister, and say, hey, can I get that dividend back? Because
I know.
we're kind of in a pinch.
Yeah.
It's your money, you're a shareholder, you're a policy owner of that fund. It's your money. So when it goes in there, it compounds, but it's never going to go down.
My thing is, to anybody that comes into any money, I think it is a wonderful thing for you to put a portion of money into one of these. That is that is my thing to all of this. This is why I was excited to talk about this. These are a wonderful, wonderful vehicle, especially for people that come into money.
Let's talk about Allister, because to me, whole life policies are different for somebody that comes into a big windfall. Because
I don't even mean a big windfall. I'm just even saying, like, let's say a divorce, okay, and you're getting bought out of your divorce, and let's say you've got $100,000. That's not a massive windfall. But I think it'd be a great thing to do, to take 75, 50, even to take the 100 if you can, and put it within a whole life policy.
Well,
Just,
Joe, since
I
you're
would,
the expert here, I have my opinion on that,
Well, I
but you're
know
the
that you should
expert.
always separate your investments. I do things a little different. I have somebody close to me that's done that with a little bit of an inheritance, and they do
Mhm.
very well from it, as well as they've split it off, and that's why they've as well they've done other things with their investment or with their inheritance as well. And that's what I meant is you don't do all of it, but if you want to do something safe and you want to be able to kind of just guarantee you're going to be taken care of, I think these are wonderful little vehicles. I
I
think they're great.
agree in terms of the death benefit side for sure. The
Yeah.
estate planning side is key.
Yeah.
I think in terms of like having if you're going to put a big chunk of it in there, just remember that if you're going to do whole life, you still need to be able to put money away annually,
No, for sure. Yeah. Yeah.
right? And if you're saying, hey, you know what, I have $100,000 windfall, wherever it came from, I don't care. You're putting it into something, and then next year, well, where's the other 100 kind of come from,
Right.
right? So I think you have to manage
True. You got to
policy
balance.
to make sure
Yeah.
that it's a long-term play,
No,
but still
right.
have money liquid, right?
It's true. But that's why you talk to Joe. But that's also
Yeah.
why you talk to Joe, right?
That's right.
Like you listen to Allister and have to get real estate and mortgage stuff and get a little bit of, a little bit of what we know. But then you go and you ask Joe, and Joe will tell you Allister and Geoff are kind of right, but more so idiots. And this is what you actually do.
We always talk about power teams, right?
Yeah.
And we always talk about who you should have in a power team. And we always say, make sure that you have a good lawyer, make sure you have a good accountant, make sure that you have a good lending partner, make sure you have a good realtor. But you also have to make sure that you have a good insurance guy or a financial management in there. Because again, and I'll just use this as an example. You might come in a big windfall. You might listen to somebody say, hey, throw that in a whole life policy, which actually probably isn't what you should do unless you can maintain that. But again, it's like getting stock advice from your buddies in the hockey room, right? So always go to your experts. But at least when you have people in your power team, they can direct you to who you should speak with, right?
Right.
Because again, we know bits and pieces, and we'll just use the whole life policy as far as some of the strengths and some of the weaknesses, but we don't really know unless we're doing it every day how this thing entirely works. Whereas individuals like Joe, they're doing this every day,
Every day.
Right?
Right.
So Joe, we always like to wrap things up because we talked about so much stuff. I want to ask you these 6 same questions that we asked you through this pod, but you need to chat GPT the answers as far as summarizing them, just so everybody can walk away with like the Cole's notes.
For sure.
So here's the first one. Remember, don't go too long with these because you can't make this an hour and a half. What does life insurance have to do with real estate investing?
It basically helps to protect your investment while having the ability to store your money in a very safe place and have access to it at the same time.
Fantastic. How do these life insurance strategies work personally and or corporately?
Just to piggyback on the first one, it gives you 4 key benefits, which gives you immediate estate plan, it gives you tax exempt growth, it gives you the ability to put money in a safe place, and it also can flow through your dollars personally and corporately, however you need to.
What are the cons of life insurance?
You need to have good cash flow. And if you think you can do better than putting your money in a whole life insurance policy, go do that.
And why haven't we heard of this before?
Because not many people can offer it, and not many people know how to actually navigate it.
Allister, you want to jump in? Or you want me to keep going?
No, man, you're going good.
What is the difference between universal and whole life insurance?
The main difference is one is tailored to a market that goes up and down, while the other, which is whole life insurance policies, don't go down.
And is this a good strategy to start with?
Depending on your situation, I'm going to say yes or no. It really depends what your situation looks like and how you can evolve that towards it if you so choose to. It's not for everyone.
And here's the thing, folks, there is so many intricacies to these policies. And I've been looking at these policies for myself for probably, I'm going to say up to 5 years. And they are unique, and you have to ask the right questions. And it seems like even in our industries, be it real estate, be it insurance, be it mortgage, you have the good, you have the bad, and you have the ugly. So it's very, very important that you connect with Joe that understands what these policies are. I've spoken to many, many financial guys about whole life policies. And when I first spoke to Joe about it, I had infinite knowledge behind it. And I was trying to set him up in so many different ways to get me to tell me the wrong answers because I knew the right answers. And I'll tell you one thing, Joe came to the table and I left after my meeting with him, wanting him to get on this pod, wanting him to talk about whole life policies and other insurance. And because you know what? He knows what he's talking about. So let's end it like this. Who are you?
Joe Tablan with Clearpoint Wealth Management.
And how do we find you?
You see me online on all the social medias. You just Google my name. It's pretty simple. There's not many of us.
And if people have a pen, what's the best way to get a hold of you?
I'm sorry?
If people have a pen and want to write your phone number or your email down, how's the best way to get a hold of you?
You can email me at joe@clearpointwm.com, or you can call me at 604-377-1915.
All right. I'm going to hand it back to my main man, Allister Carrington.
That's amazing, man. That's awesome. FYI, just so you folks know, the reason why Jeff asked me if I wanted to kick in there and ask any questions, I was enjoying the hot chocolate and playing with his dog as he was asking those questions. But I figured Jeff had it all covered. He's, Jeff Strong. We've listened to him all, for what, 44 episodes of this now? We know Jeff can hold this down without me. Come on. That is awesome, people. Once again, Joe, my man, thank you so much for everything. Your knowledge is truly appreciated. Again, this is why Jeff and I have doubled down on making sure that we deliver value to you each and every week. We are committed to your success in every way, not just mortgage related, not just real estate related, but financial wealth related as well. We hope to bring you value all the time. So with that being said, please remember to like us, love us, share us, and most importantly, stay empowered, stay informed, and most importantly, Jeff,
stay tuned.
That's it, my man. Stay tuned. Everybody have a great week. We'll be back at you next Wednesday. Peace out.